Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is really, look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160. It is the fifth biggest bank on Wall Street. It is significant in that it is establishing a price for some of these hard-to-value securities, and as you are well aware, that price is pretty much zero.
A bank with a deposit base that Wall Street had been mistakenly concerned about. SVB, it's the old Silicon Valley Bank, recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yes, some of them come back here with the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. This bank is the bank to startups. It's the bank to people who have illiquid securities that were unfortunately loaned against. So he could be right, but this is one of those where why don't we wait until we see? I mean, we got a couple of minutes. I've learned enough in my lifetime that if I have to wait 11 minutes for an answer, I'd rather wait 11 minutes.
How concerned are you about this bank versus what we're seeing across the board? You look at some of the other regional banks, those stocks have fallen quite precipitously. Do investors know something that maybe depositors don't?
Well, look, a lot of these banks have some commercial real estate exposure. A lot of them may have the wrong duration on the portfolios, meaning that they're really much more sensitive than to these rate hikes, and the Fed moves so quickly. Silicon Valley Bank is unique because they were always willing to lend against securities that haven't come public.
The FDIC just reported that California regulators shut down Silicon Valley Bank, a big lender out in California, after reporting a loss of over $1 billion. There were fears of a run on this bank. People wondering if they should have PTSD into 2008. What's going on here?
Yeah, this really is an earthquake, especially for the tech community. Silicon Valley Bank dropped by 60% yesterday alone. We just learned today that California regulators have shut this lender down. This is the biggest failure since 2008. It's actually the second biggest failure ever since Washington Mutual in September of 2008. This is a major lender to tech startups. The FDIC says that insured depositors, they will have full access to insured deposits by Monday morning.
Today is March 14th, and this is the third day that SIVB has. So currently, there's absolutely no news, and as of right now, everything is going to zero. As you can see, JimCramer has been wrong time after time, and I really hope that people don't follow him on his stock trades. He spoke about Netflix, Bear Stearns, and now SIVB. This stock, there's no chart available, but if you look at the 5-day chart, it's down 60%, 1 month, 66%, 6 months, 72%, and year-to-date, 52%. And it closed at 106, March 9th. Everything that we invested shareholders are never going to see this money again. And guess what? JimCramer will continue to give out stock picks like it doesn't affect him.